and informed to where they want to go.
Okay.
Yes.
Now, starting off, just to break the ice a bit for the viewer who is watching this particular morning to understand what we are talking about, let's start off with the key things, the core values. Now, what is investment?
So, investment is setting aside hard-earned money to receive some form of return in the future. And that's where the investor comes in. He comes with his hard-earned money, seeds it, and expects some form of return, financial, social, and basically return on investment is the biggest thing he'll speak through all his time in the business.
Now, when we're looking at investment, what are some of the key aspects that an investor needs to look at even before they think about investing into a project or investing into an SME?
So the first step here is the quality of management, the entrepreneur. Who is behind this business is very important. At the very start, you have founders, you have co-founders. These two people form what the business will be. It could be that they have experience in that field. It could be that basically they have the business acumen, but most importantly, the growth mindset. So mindset here comes into play very importantly. And the second aspect that this investor is going to look at is the quality of the business opportunity. He does not want to invest in a big fish within a small pond, and neither does he want to invest in fish which are going to die within a pond. He wants to invest in a small fish that will be able to grow in this pond, and he's going to eat from that growth. So he's looking for growth at this point in time, and he's going to invest in growth. He's going to invest further in how he can help you across that path, and we'll talk about that aspect later on. Since I'm at Smart 24, we'll talk about smart capital. What is it? Yes.
Now, in relation to that, in relation, of course, to the topic after understanding what investment is and understanding what are some of the key or characteristics, so what are some of the questions that an investor might consider before investing in a particular company. Now, what does it mean to be investor ready?
So what it means to be investor ready is, what does your business signify in the eyes of an investor? So the investor should look through your business significantly and understand what is it in for him. I usually use the acronym Wi-Fi. Wi-Fi standing for what is it in for the investor. The investor has to have something that is in for him. And investment, in a nutshell, like I said, is a game of return. So how is he able to maximize profits while minimizing risk? So he needs to see this entrepreneur with these aspects: the aspect of minimizing risk, the aspect of maximizing return at the best rate possible. So he needs to ask himself two questions. Why shouldn't he put his money in land and give it to you in form of investment? You need to convince him that the future is brighter while investing in you and foregoing.
Yes, giving him a reason to invest his money.
Yes.
Now, what are some, because now if I'm looking at investment, if you have talked about the investor, how about me, the SME who is being invested in? Are there some things I need to put into consideration? Like, let's say, if you're investing in me, do I expect a particular way of conduct from you, the investor? What are some of the things that we need to consider, me as an SME?
Yeah, so as an SME, you need to look at an investor who brings in more than capital. You need to look
goes
at an
beyond
investor.
capital.
Yeah. That's what in investment, in modern investment, we call smart capital. The investor has to come into your business with more than capital. It could be that uncle of yours who has a very long line of people who believe in him. It could be that neighbor of yours who owns that manufacturing firm that will provide you with cheaper input. So that could be your first step towards the investor. I think the second thing about it is what I said earlier on, to put into more perspective. Do you have the numbers? Do you have the numbers to show where you are right now? And secondly, I think the biggest aspect every investor should ask themselves from an entrepreneur, and the entrepreneur should also know how to answer this, is where do you want to be in 5 years? Every entrepreneur should know where they want to be in 5 years. Most times I've seen very many startups get the wrong kind of financing, which happens here in Uganda, where you go to a bank and get debt that basically suffocates your business to death within the next 1-2 years. I think where they go wrong is their funding strategy. The kind of capital they need and the growth they need don't match. The capital is not patient enough to allow them leapfrog and jump to the next stage. So it's very important for the entrepreneur to candidly ask themselves, where do I want to be in 5 years? And how big is that 5-year dream? Is it big enough to finance itself? Is it big enough to help me grow sustainably? All those questions need to be candidly responded to. And I think lastly is compatibility. Your plan needs to be as compatible as possible to the current situation. Okay. I don't want an entrepreneur to look for $1 million when they know that the market currently can't give them $1 million. They need to have that fact-finding moment, that moment of truth, because I mean, it's his business idea, his business at the line, and without having that candid discussion with themselves, we call them private meetings. I think some entrepreneurs have private meetings when they're walking on the road. That private meeting, when the board sits, the board needs to decide and say, I think this is the truth and this is where we're going. Yes.
Now, looking at still the person who is being invested in, or the organization or something like that, now would like to understand, I should be having the rights, or looking at an investor coming into my company to support me. Do I necessarily, is it that an investor only brings in money and finances? Do I need to consider maybe who he is or who she is in society? What do they come with apart from the money aspect? Are we looking at face value? Are we looking at who knows you anyway? Are we looking at what kind of people that you represent? Because I'll give an example. It's just an example. I mean, if I had a company and then I wanted you to invest in yourself, if my company is advocating for the rights of women, yet I hear that you beat your wife, I mean, why would I allow you to invest in my company?
So those are candid questions that every entrepreneur needs to know and needs to ask themselves, because this is your baby. Just imagine you have a baby and you left your baby to an abusive maid who they have continuously told you has left different homes and has been beating 2-year-olds with with a stick. So it's very good for these entrepreneurs to do their homework and also seek professional investment advice. So we as advisors, as consultants in this field, are able to, on the first dot, on the first meeting, we'll know whether the intentions of that investor are right for you. 2, whether it's a match, whether this investor really has good thoughts for the business. Because I've had entrepreneurs ask me this question, that won't they come and steal my idea? But the question then goes to the entrepreneur that, have you done your homework well? Is this person of good integrity? Is he of good society standing?
I think that is where we miss it, because we are so quick to run for the money that the investor brings at the table, and we forget to actually go back, do our homework, do research, do thorough investigations, and make sure that the person that you're bringing on board is actually worth bringing on board. Because you'll bring on board someone and then all in the name of an investor, and then lose it all to a deal gone bad.
Yes. And that also goes back to, I think, that private meeting that every entrepreneur needs to have, I think, every evening when they take a walk or every morning. It's very important. It's very, very important. And you're the vision bearer. I think the vision bearer, they are standing in for your company. So you know where you want to take it. You know who you want to bring on board. And I think it's something we're going to develop over time. But most importantly, don't go into that deal alone. Look for a lawyer, look for an investment consultant, and trust me, the price could be a little
high, but it's
hefty,
worth it.
but it's worth it.
Okay.
Yes.
Now, looking at two separate terminologies that I'm sure the viewer would like to understand, what is the difference between investor readiness and also looking at investment readiness? Because an investor might be ready, but his investment there, is it ready as well?
Yeah, that's a very, very nice question. So investment readiness basically is what you talked about. Someone just running, I need to put up a new line, a new commercial product line, yeah? And you don't actually think about how viable that commercial line is going to be. So basically at that point in time, you're ready for the investment, yeah? But you're not ready for the investor because you don't know what is it in for the investor. So these two need to have an intermatch, yeah? That compatibility, yeah? I wish we had the Abanonia of finance. We would have to have that matchmaking process where we say, I think you're not ready yet. And that is when the investment consultant comes in. So you may be ready for investment as a company. You've laid out your plans, you know where you want to go, but you're not ready for the investor. You're not ready to tell them what they want to hear so that they can open their wallets, sign a check, and seed that investment in your business for growth.
Now, looking at, you talked about the aspect of signing a check. If there is one thing I know in regard to investment, you must be, in order to convince an investor, first of all, to invest in your company or to invest in a project that you want to do, you must have good marketing skills. However, for us, I personally, I would want to pitch something to you today and the next day you're signing me a deal. What are you taking so long to think about? What is your opinion on that?
So I would also I would like to relate this to courtship. I mean, if I met a girl today and tomorrow I want to go to their home and get introduced, then thereafter I want so many other things that go beneath it. I think it would read a red flag. It would read that I'm hiding something. It would be that I don't know what would be the rush. So I think the biggest point that would come from here is many entrepreneurs have that sudden breaking syndrome. They wake up tomorrow and they want capital the next day. It's a daily thing, a daily cadence in your business for you to plan for capital. So planning for capital means that you're able to understand what your business needs at different points in time. And if you're able to know what your business needs at different points in time, you will be able to understand what capital you need when and how. So I urge every investor to make capital fundraising a daily item. You want to get an investor to come in within a month, within 2 months. It's a 6 months journey. Must have you at minimum.
Okay. Now, looking at Uganda as a country, I mean, we have had a number of incidences in Uganda which would definitely chase an investor away. I mean, recently we had the internet shut down. Now, if we have such things, and then we had the elections, which are really never peaceful. So many issues in a country that an investor would consider before investing. First of all, not only just in a company or something, but even the country in which that company resides. Now, take us through, would you say that the current landscape of Uganda, the current investment landscape of Uganda is good and an open door for investors to come in? Or what would you advise?
That question it has a yes and a no. I think the no being on the bigger side, and the yes being on the other side. So I'll first answer, I think I'll first go with the good side, yes. Uganda as a country has the potential to spark growth due to the fact that it's a developing country. So very many investors are looking out for growth, like I said in the beginning, and developing countries are just the place to be. When you look at the recent startups that have been developed in Uganda, many of them have been able to attract grant capital from foreign investors. And this grant capital has really come in big, I must say. So on this point, what I would not so much and what everyone needs to put into consideration is investors are only going to come and invest in a business which has been able to first attract local capital. So we have very many investors on the other end who are asking, who are the other people who have invested into these businesses? So many of the investors, the foreign investors, have been seen recently developing the co-investment model. They believe they cannot understand the Ugandan landscape any much more, so they want to see how can we come in and join other local investors who have already invested into these businesses. So the biggest strategy right now is going to be, how do I get local investors to invest as small as it can be into my business? As long as someone invests into your business, you are prone to attracting foreign investment. But I must say it's an uphill task, because currently we are graded high risk due to so many uncertainties, so many political uncertainties, and also the stance that COVID-19 created within the different economies in emerging markets. Yes.
Now, you talked about the tension and all that. Do you think this is one of the reasons why investment, particularly in Uganda, is not really picking up because of these uncertainties? I mean, if you are an investor, you should be willing to take risks. If you're an entrepreneur, entrepreneurship comes with taking risks. But looking at the investment landscape, do you think these are some of the reasons as to why investment in Uganda is not picking up?
There are so many reasons why investment is not picking up. And the first one could be a wealth gap. There is a gap within our wealth planning sector, and due to the fact that our GDP to savings ratio is just 0.2, you can't imagine. So that 0.2 mainly goes to the NSSF, the National Social Security Fund, which ideally invests in safe havens. So there is a little capital from savings to play in this space. But recently I saw the government trying to foster economic stability, to foster confidence in the system. Whenever I tell my friends that I do save, I do put aside part of my income for saving, how do you do this? So it's a journey that we are going to take, and this journey is going to be taken over time. So I must say there is not enough capital to go around. Two, we are not able to attract enough capital because, like I said, what is it in for the investor gets a little tough. So what is it in for the investor gets more tougher when you have such situations. And risk, I must tell you one thing in finance, risk and return move in opposite directions. So the higher the risk I take, I would expect to receive again something much higher than what I'm risking for. So the risk is not really commensurate to the return investors are seeing in the market. I think that is one thing that many entrepreneurs should work upon. And I think when they work on this, in terms of what I talked about in the beginning, growth stimulates return. And when you stimulate return, return is much higher than the risk, the investor won't say no to investing.
Okay, yes. Interesting conversation that we are having this beautiful 23rd of March. Of course, it's a Tuesday, coming to you live from Smart 24 TV, in particular the Business Command Center. 30 minutes past the hour of 8. We do take a quick break and return with this conversation. Do stay with us.
Smart 24. Smart Business.
33 minutes past the hour of 8, and of course, if you are just joining us, we're coming to you live from the Business Command Center, discussing issues in relation to your business intellect. However, this Tuesday, beautiful morning, we are looking at the spotlight on investor readiness for startups. Now, before we did go for that short break, Reuben here was giving us an insight on some of the nitty-gritties in relation to investment and what are some of the things SMEs need to consider when investing, but also looking at the investor side. You as an investor, what are some of the things you need to look out for? Now, Reuben, tell us, what are some of those red flags that as an investor, this is definitely a sign that you should not be investing in this particular SME or company or even project?
So as an investor, one, an entrepreneur who is not coachable is someone who is very, very hard to work with. As long as the entrepreneur is not ready to learn, not ready to involve you in their business operations, and also basically not trainable. Not trainable in the sense that they assume they know it all, they have their business round up around themselves, I think is something that would hit the first red flag. Two, an entrepreneur who is not committed to the business is looking at this as a one-off.
Okay.
So it would again speak to the growth plan. Where does this entrepreneur want to be? Where do they want to go? As long as they can't answer that question and it's not clear within them, then I think the second red flag goes on.
Okay.
The third red flag would mainly be around value. So, I mean, every entrepreneur should value their business and know its value. And behind that value, which is not really commensurate to the price, they should be able to tell you why they value their business the way they value it. I know this is a gray area. This is an area where many entrepreneurs and investors fall off. Someone will value his business at $1 million and really can't see what $1 million is in that business. But then again, I think that is where the entrepreneur should be able to seek investment advice. I think beyond that, the entrepreneur should be able to explain why they value their business that certain way. And I think towards the end, the entrepreneur should also be, there should be a connect with the investor. And especially the first word I started with, the acronym Wi-Fi, this entrepreneur should be able to clearly articulate what is it in for the investor.
Now, of course, aside from at the end of the day, when you're investing in something, you definitely do have to look at the end of the day, what am I going to get out of this? However, now, to the person that is being invested in, what are some of the things, or how best can they keep an investor on board? Because you do not want an investor to invest and then get bored along the way, or even remove. We have heard of so many instances just recently. A number of investors pulled out of a certain company, and it's really bad because the company went bankrupt. So how do I keep an investor on board throughout?
So I think the critical things to keep an investor on are one, the way you start your conversations. Don't oversell yourself. I've seen very many who go out of their way and say, we are going to do this much, and then it all crumbles. I think the picture you should give the investor should be at your worst. At worst case scenario is the best way to have all this into perspective. So the investor is not expecting too much, and is crushed down in terms of thought. The second part, I think, is having key success factors. These key success factors will help you keep the investor at breast with the current dynamics that are happening in the market. How are things evolving? And this can be in terms of milestones. Milestone-driven investment has seemed to be the most efficient way to invest in a small business. Why? To all of us, money excites us. So you give a startup $1 million. The first thing they'll do is make rent a glass office, buy an iPhone, an iPad, an Apple, I don't know, an Apple Watch, buy all the Apple products, buy a Benz, buy a furnished house in Kisasi or uptown Nigeria, and really those things don't speak to the business. So from the very start, every entrepreneur should have that ability to say that month 2 will need $2,000, month 3 will need $4,000. So the investor is able to invest this money while seeing where it's going. He'll have the trust, he'll know what you're doing, and he will also keep updated because continuously you're coming to him to get money while telling him what you've done. So milestones are also a very nice thing to keep the investor on and on deck. But most importantly, don't oversell
Don't
yourself.
oversell yourself.
Yes.
I hope that particular phrase has been taken to heart by the people who do not oversell yourself. And yet here I was thinking that when you overmarket yourself, then that's when maybe you should be able to get a potential investor. But well, the expert himself has spoken. Now,
I think marketing yourself then goes, I think, into perspective. Basically what you can do, I think going beyond what you can do most times doesn't work. I think it's a life aspect I've learned over time, and it will help you avoid so much stress and also keep you in good mental health.
Okay.
Yes.
Interesting. Now, looking at the capital, what is the capital that is available in the Ugandan market?
So the types of capital available in the Ugandan market are basically right now are traditional sources of capital. We have our friends and family.
Okay.
So in finance, we call it friends, family, and fools.
Interesting.
Why we call them fools? There are some people who will give you money. They are not foolish, but at the end of the day, if things go wrong, they could be foolish to have believed in your idea.
Okay.
So that's the first stage. So these are the first people who are going to invest in you. When you have that idea, when you want to start that rolling chicken joints in your home area, those friends who believe in that dream are going to be your first investors.
True.
As you go up the ladder, you'll find angel investors. Still, that's a component of your circles. And a bit from out of your circles, you'll find very many hubs like the Innovation Village, hubs like Design Hub. So those hubs where entrepreneurs continuously network, you also be able to find so many of those. But also as you network yourself, that's why we actually encourage entrepreneurs to have an elevator pitch. A 2-minute talk about their business without complicating and talking about the science that is behind their business. I know you've had very many friends of yours tell you about their businesses, and you really
almost, you just don't even understand.
You switch off, but you have to.
Exactly. You don't even understand. You don't. That is the whole point about. You do not want to complicate things for me, who is going to support you, because and especially when it comes to projects that are science related. My God, indeed, do not market yourself too much, because someone who would have wanted to market on you. Yes, go on.
So as candid as possible, you need to have an elevator pitch. You never know where you'll meet your investor. So after you've been able to, so at this stage, you're trying out your business model. You are doing so many things, reiterating, pivoting. Pivoting is going 360 and coming back to the table to see what has worked and what hasn't worked. After you've been able to validate your business model, and it seems to be making money, then this is the stage where you now walk into the venture capital space. So there are very many venture capital firms again within our space in Uganda. Examples are quite enormous. There is Pearl Capital, Uganda Development Bank also has a component of that. There's so many. I think we may end the show when I'm just speaking about them. Then after that space, you'll do some PE, some venture debt, some bridge financing towards the IPO stage. And the IPO, forgive me for using that linguistic, is an initial public offer. When you go to Capital Markets Authority and say, I want to list on the public exchange. So that stage, you will have amassed a good amount of growth. Give a picture of, say, CIPLA over those years, grown and been able to attain heavy market share. So those are the types of capital in the public domain. Leave alone the loans from banks, circles, and also loans from your friends and investment clubs.
Okay.
Yeah. So those are the avenues that are currently available for capital, and the in route to getting to many of those organizations is go to their website, click, look at their criteria, find out whether you fit their criteria, ask for a meeting, talk about yourself, and the biggest tip is don't oversell yourself. Yes.
Now, looking at still in, of course, with everything that we talk about, there should be a challenge affecting it in one way or the other. Now, what are some of the key challenges that affect investment?
So the key challenges that affect investment are mainly around the risk and return. So risk, we should not expect something to be riskless. I think that is why we jump into
That's
scams.
why we get it wrong.
Yes. So you find someone giving you a deal, an investment deal, which has no risk, which is riskless. I don't know what that one would be. So you want to come to your investment and look at it as investors, not risk prone, but risk planned. So you need to have a risk plan, critical risk areas, plan for them, and in that plan, look at what would happen if things went wrong. What would you do if things went wrong? And all those are developed from the key critical factors. So if you're out there and you don't know what risks are in your business, look at those key critical factors that are in your business. If it's the price that is a key critical factor, then it has a risk, it has a tandem risk to it. What could go wrong with it, and what is the plan? Because as investors, we're looking at maximizing profits and minimizing risk. So two, we find it also a problem to find a good deal. As investment practitioners, we are calling out entrepreneurs to provide solutions that fit the market. I think I've seen so many good ideas, but the market is not ready yet. And getting that market ready is a very heavy cost for the investor. So when he looks at return on investment, which is one of the biggest metrics he's going to look at, it does not make sense for him to invest. So I think let's rethink the kind of businesses we set up. And I think then there, a bigger step will be taken. The third challenge I think we have is these entrepreneurs have not been able to go in all. Yeah, to go in all, many of entrepreneurs are part-timing.
Yes.
They are in it because I think they have failed to get something else to do, which shouldn't be the case. Entrepreneurship is a very nice journey. It's a very nice job. It's
It
a job
requires
which is
lots of
rewarding.
commitment. Some people just, throw a business there and, that is it for them.
Yeah, so many of them actually call them side businesses. That side business should be your main business because 10 years from now, we won't ask where you worked or what fancy suit you put on. We'll be looking at bank accounts, and 10 years from now, that guy you're despising on the road could be your boss. We have had these stories. So I think candidly, it's thinking around where you want to be from the very start. I think the fourth challenge, like I mentioned earlier on, is we need to learn to save. if we are to invest in local businesses, we need to learn to save. There are very many saving vehicles that are available in the market. We need to learn to use these vehicles. And also think in terms of, when you save without a plan, it's very useless. Yeah, at the end of the day, that training day will come and you will sweep your account out and you'll ask yourself, what is the value of saving? But everything with a plan, be it saving, be it investment, will have to work out in some way or the other. So I also think we lack that patient local capital, which is around saving.
Okay.
Our savings rates are quite low. I encourage people to go and save, so that you're able to invest, you're able to become the investors of these small businesses within the Ugandan entrepreneurial ecosystem.
Okay. Now, as we wind up this conversation, are there any remarks that you would want to leave in regard to this particular topic?
So my key takeaways for this topic are mainly going to be towards the entrepreneur.
Okay.
One, like you've mentioned, commitment. Every entrepreneur should be committed towards growth, towards providing value. Value. I don't know how I forgot to speak about this, but value is very important. Value across, you should know what what your customer values. I've told you what your investor values, but you should know what your customer values and work towards providing that value to these people. Two, you should learn how to be coachable.
Okay.
Because entrepreneurs, I've seen in so many other places, are stuck to their very good idea and not willing to learn and listen from the investor. Three, have your business plan, have a working business plan. A business plan which is working means that it has key success factors, it has financials on board, and all these speak towards the growth plan of the business. I think four could be running your business by numbers. Run your business by numbers, keep records, and in entrepreneurship, what we call traction. There are those key growth factors that, our customer base has grown from 0 to 100. Our supplier base has gone from 0 to 100. And the story around that is, I think from the very start, I think even in the Bible it's there, that one who has will be given more. So you need to be somewhere. The investor needs to meet you halfway. Needs to find you somewhere after doing something.
Yes, definitely.
And you need to have evidence. There needs to be some kind of evidence. Not that I have it, and when you come to ask where is it, it's there. Where is it?
It is there.
It is there. So I urge everyone to have a record keeping system. And lastly, what I want to talk about is what kills many businesses in Uganda. Governance. Having a good governance system. So I'll give one tip to every entrepreneur. There is that person you admire. Please call them on board as an advisor. These advisors are going to help you so much in your capital raising journey. So what I mean is, if I come on board, I'm not asking you to invite me on your board, but if I come on board of your company and I've seen you do the right things the right way, I'll be intrigued to either ask my contemporaries to invest in your business, or if I have the capital, I could invest in your business. So these things work in tandem, they work hand in hand. Trust and finance are one thing you can never separate from each other. So in finance, the biggest principle we have is trust. Trust, integrity, and ethics are the biggest things that build the finance industry. So in a nutshell, run your business with these 4 P's that you talk about. Have the right people on board, have the right team, produce the right product speaking to value, have the right process that runs the production process, and look towards producing a profit, and that profit will attract investors. You won't need to talk so much about it. Like PL Lumumba professor says that when something is good, you don't talk so much about it.
It shows for itself.
Yes.
Yes.
Yeah.
Okay, interesting. That is the conversation that we are having this morning, looking at investor readiness for startups. We have handled a number of issues, and I do hope while you are listening in live or watching live from wherever you are, from the comfort of your home or as you are driving, that you are able to pick a thing or two when it comes to investment. Are you an investor or are you an entrepreneur? What are some of the things you need to consider? What climate do you need to consider even while you're going to invest in a particular company, in a particular project? These are some of the things that we have been discussing this beautiful Tuesday morning. Otherwise, we do thank you for joining with us. Have yourselves a good morning.
Smart 24. Smart Business.
Amanya gange nze Ayeba Johnson mva Kyenjojo nsika chapati simaze mu Bangladesh eteri yawo myaka nge 2 yokka nguzeemu bintu bingi, ninawe enkoko zange, nina embuzi.